what has kept the GDP numbers up in the last few years? High-end consumer and government spending. And both of those are about to change. So we think that we'll have, and in fact, they're in the process of changing as I speak. So I think that it will be the end of the rolling recession, and we'll have a clean slate to move into the future with what we believe could be a very strong productivity-driven recovery and then expansion. The technologies around which we've based our research and investing, they've been germinating for 25 years, some of them, and now they're moving into prime time. And when people and businesses are scared, they're willing to change the way they do things. And we think that will accrue to the benefit of robotics, energy storage, AI, blockchain technology, and multiomic sequencing, and to the convergence among those platforms and the 14 technologies that underlie them. So one of the analogies as we're going through this market turmoil that I'm using, because it does feel very much like this, this is how it felt when we were going into COVID. And you remember there was a month-long deterioration in the stock market, fairly significant, fairly severe. And at the time, we were saying, wait a minute, who's going to solve this problem? It's the innovators. Who's going to sequence this coronavirus? Who's going to use synthetic biology to develop tests so we figure out if we have this coronavirus? Who's going to develop the vaccine? And of course, those companies were in our portfolios. And I feel the same way now. A lot of businesses, a lot of consumers are fearful, and they're going to be looking for better, cheaper, faster, more productive, more creative in terms of products and services. And so we have high hopes that when the new leadership shows itself, and typically if we are in a correction or a bear market, towards the end is when we see new leadership. I remember very clearly in 08-09, the market did not bottom until March of 09, and our strategies started outperforming in November of 08. This is what typically happens as the market looks to the new leaders. We know the Mag 6 had an extended stay, and we think part of that had to do with, their huge cash cushions and strong cash flows, and that's all the market was looking for in a period, especially starting after 08-09. That concentration towards the Mag 6 hit epic proportions recently. And we don't think they'll be the new leadership. Some of them will participate for sure, but we do not believe they'll be the new leadership in this market. And we do believe that if the market broadens out to more and more stocks, then this bull market that we've been in, which we would have considered, with just a few stocks really leading the way, to be not an ideal or not a very healthy market. If we get more stocks participating, then that's a bull market that we will call healthy.
Hedge fund manager Cathie Wood has made some strategic moves in Nvidia and Amazon stocks lately, stirring up the market. Her moves are getting the financial world and its investors excited after ARK Invest ETFs acquired substantial shares from both Nvidia and Amazon, along with other notable crypto and tech companies. Let's unravel the intriguing details that have investors on the edge of their seats, wondering about the future implications of Wood's calculated decisions. Welcome back, everyone, to Investocracy.
As we all know, the markets are in quite a bit of turmoil because of the tariff, what we thought were going to be negotiations, and I still think will be negotiations. But President Trump has taken a very strong line of argument here, and arguing that reciprocity is necessary to create a fair playing field out there. Now, we're all trying to get our heads around how exactly he we know how he calculated his version of reciprocity, but it doesn't seem to make very much sense. And things do feel a bit chaotic out there, and the markets are convulsing as a result. There's a lot of uncertainty. So I've been in Asia for the last couple of weeks, and as I've been going around, and as the tariff, the intensity of the tariff debate has increased, I've tried to cut through it in a way to say, because I believe this, we know that Trump wants a legacy. President Trump wants to be one of the greatest presidents ever. That's his objective, and he's not going to get there by throwing the economy into a recession and the stock market into a bear market. And we're verging on both of those now. So we're getting close to the line in the sand, where I think his negotiations will kick into gear and will be more productive than what we've heard recently. So that's the bet, and it's logical if we understand who President Trump is. But as I've been going around, I've said not only is that our bet, but we're seeing other reasons for the tide to change here. According to the Atlanta Fed's GDP Now survey, the economy contracted almost 4%, that's real GDP growth, sequentially at an annual rate in the first quarter. That's a big drop. Now, a lot of that could be imports ahead of the tariffs, and surely that is the case. The offset, though, would be a lot of them ending up in inventory, so there could be a lag there. I don't know. I would say that in the second quarter, the likelihood of a negative quarter is increasing here just because of the amount of uncertainty. Well, we know that about 30% of the labor force is probably wondering if it's going to keep its jobs, or the people in the labor force are going to keep their jobs. Federal employees, now that's not the biggest part of government, but there is a trickle-down effect to state and local, and even to quasi-government jobs in the healthcare and education space. And that would account for 30% of the labor force. Just wondering, worrying, and probably holding back on purchases until the outcome is clearer.
Although the stock market has left many investors cautious, Cathie Wood stands tall as a beacon of financial wisdom. Despite the recent turbulence caused by tariffs, Wood remains undeterred in her pursuit of growth opportunities. One can't help but admire her confidence, especially after market fluctuations and stock uncertainties. As we delve deeper into Wood's recent acquisitions, it's evident that she is betting big on innovation and disruption. From Nvidia's cutting-edge AI technology to Amazon's dominance in e-commerce, Wood's portfolio reads like a playbook of future trends. She bought from Amazon shares valuing roughly $9.3 million. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
That's right. We don't want investors to be panicking now or rage selling. We've had a very painful drawdown, and I know we're facing this huge uncertainty that may not end tomorrow, might last months. But like the other declines in stocks, like the one last year or the ones in 2022, the ones who could endure that short-term pain and took advantage of those declines are going to have good opportunities.
Yeah, what if things are different, though, this time? That these tariffs are going to be a favored measure by this president, whether they're permanent, temporary, months, years, no one really knows. They're not going to be a day. You know that.
Yeah, listen, across the street, every big bank, every medium-sized bank, I'm sure Fundstrat have hosted calls with their clients to discuss what they expect for tariff. And I've been on a couple of those calls, and there's universal, complete uncertainty as to what's going to be announced in even 45 minutes time, let alone 45 days time. So I think it's fair, to Tom's point and to the professor's point, for everybody to have a little bit of fog in their investing outlook right now. However, I want to take a step back here and just note, to the professor's point, that stocks are long-lived assets. Risk assets are long-lived assets. And unless you think a recession is forthcoming and a meaningful decline in earnings is forthcoming, then probably your best bet is to ride this out. And to your point about EPS, 280 right now for the next 4 quarters is basically unchanged over the last couple of weeks. Now, you could say that's the ignorance of the market, thinking that this isn't going to matter, and someone thinks it does. But it also could be telling you that maybe the tariff headlines, which populate all the newspapers, aren't quite as bad as the reality on the ground.
What about that, Tom? At the end of the day, this entire conversation comes down to what earnings are going to be. And then we have to decide what we're willing to pay for the earnings in stock prices. Do you have any level of confidence now that you can see through whatever fog exists?
Well, I think people are making what I would call like linear adjustments to earnings because they're making a tariff assumption, not assuming that there's companies that can find ways to either get efficiency or they're going to get a currency benefit. I think earnings are going to change a lot less than people expect. And the easiest way to see that is the bond market is a very good economist. High yield spreads have not widened dramatically, even this week as stocks took it on the gut. And if you look at one year inflation break even, so the estimated inflation from 1 year from now, 1 year ahead, that's actually fallen 30 basis points. So the bond market is not expecting more inflation. I actually think earnings are going to hold up a lot better than people expect.
While the rest of the market may be bracing for impact, Wood remains resolute in her vision, always being known to invest in disruptive growth stocks. She remains optimistic about Nvidia's long-term growth, particularly due to its advanced Blackwell chips. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All this said, and you're very plain in the criticism that you have about how this all came out, the severity of it, and what the ramifications might be. You're more net long now than you were prior, and you've added to some long positions, including, I'm told, Nvidia, which is ugly today and has not traded well at all lately. Why was this the moment to add to that stock?
True. The semiconductor index is down 20%. Nvidia, as you know, is down from, I think, a peak this year at 150. So this stock's down by a third. Remember, we entered today in kind of bomb shelter positioning. We had puts on the NASDAQ. We had tremendous number of shorts. We were sitting in a lot of cash. We only had 50% of our long book even positioned in the market. So we're dramatically outperforming on a day like today. So we're going from the bomb shelter to simply, our safety positioning. And that means adding about 15% of net exposure. And we're adding it in the areas that we believe we're continuing to see secular growth And as you know, the growth and the demand for GPUs is off the charts. You hear it from OpenAI, you hear it from Google, you hear it from Elon, you hear it from others. I know there's a debate about that, but that's the side of the debate that we're on. And then although we saw these tariffs announced yesterday, we also saw a list of exceptions. And one of the list of exceptions, wise exception, is semiconductors. And I think the reason that semiconductors are being accepted is because for us to charge a tariff on our own chips, right, which are fabricated in Taiwan because they can't be fabricated in the United States, we don't have the fabs yet. TSMC, who he mentioned in his speech yesterday, has committed to massive investments as a result of the president's policy in Arizona to build cutting-edge fabs. But right now he gave them an exception because we know if we increase the cost of these chips that we design to our own companies like Meta, like Google, like Microsoft, like OpenAI, we're only shooting ourselves, right? Because we're in a global race in AI. We can't hamper our ability to win that race. And so I think that was a wise decision to put them on the exception list. I'm sure he's going to keep an eye on whether or not the fabs are being built in Arizona. But I think we're going to net end up in a much better place in terms of our global supply chain as a result of these decisions. But that's the reason we're buying Nvidia today. We think the demand is off the charts. You know, we think the negative impact from tariffs is going to be much less than in other areas. But listen, if we end up in the teeth of a recession, then even Nvidia at 18 or 19 times earnings might not perform that well. Like, we need to avoid a recession in this country. I think it's very bad if we find ourselves in the fall in a recession, and we're heading into the midterm elections in 2026. I don't think the president, the administration, or Congress want to risk a recession, toward the end of this year.
In terms of Cathie Wood's investment strategy, one thing is clear: opportunity favors the bold. With insights from the brightest minds in finance and data-driven analytics, Wood's moves offer a glimpse into the future of tech investments. So, as you ponder the implications of Wood's moves on Nvidia and Amazon stocks, remember that the market rewards those who dare to dream big. The forecast may be hazy, but the growth potential is clear. So, what's your take on Cathie Wood's stock acquisition amid the market's constant change? Share your thoughts as we navigate the ever-evolving landscape of stocks and stories. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.